I'm Joel Berner, Senior Economist at Realtor.com, filling in for Chief Economist Danielle Hale. Welcome to our official Best Time to Sell. This week, the week of April 13th through 19th, has been identified by our research team as the best week of the year to sell a home because it combines high levels of buyer activity with higher sales prices and less competition from other sellers. So be sure to get your home out there as we enter the peak of the real estate market season. In fact, our recent survey found that 70% of sellers believe now is a good time to sell a home, and 81% expect to get their asking price or higher when they do sell. With the share of homes on the market with price reductions sitting at about 18%, we think this is a reasonable expectation for sellers to have. Our survey also found that 55% of sellers who have been planning for a year or more to sell their home feel locked in by their current lower mortgage rate. And as we'll see later in the video, this problem is likely not going away. Nevertheless, life happens, and 79% of sellers are making a move out of necessity rather than market opportunity. This week's market data readout showed the median listing price of a home at the national level holding quite steady, while new and active for sale inventory are growing significantly and picking up pace from last week. It has now been 75 consecutive weeks where active listings have grown year over year, as the long, slow recovery from the post-pandemic buying frenzy continues years later. Time on market also increased from last year by 4 days, as more active listings combine with a slower pace of sales to keep homes on the market for longer. A major factor in the slower pace of the market is mortgage rates, and this week the Freddie Mac rate for a 30-year fixed-rate mortgage jumped 21 basis points to 6.83%. This came on the heels of the 10-year Treasury yield's acceleration due to the market volatility created by the Trump administration's tariff announcements. The Treasury yield has cooled off in the past few days, which may soften the upward pressure on mortgage rates in coming weeks, but tariff-induced inflation could keep rates elevated in the long run. Tariffs don't just affect the financial markets. They create additional costs for home builders that exacerbate the home affordability crisis that this country is experiencing. March new construction data, released this week but covering the period before the tariff announcements, was a bit of a mixed bag. Starts and completions slowed from February while permits picked up. Some of the retreat in starts could be attributed to tariff threats that were made in March or earlier, causing uncertainty among builders, but we expect more significant pullbacks in construction data in the coming months because of tariffs levied against Canadian lumber in early April. But lumber isn't the only commodity subject to new tariffs from the Trump administration that impacts housing. 25% tariffs on imported steel and aluminum will make multifamily construction projects more expensive, and that cost will be passed on to renters. The March rent report was released this week, and while it marked the 20th consecutive month of year-over-year rent declines, it also calls out that the rental market is subject to the performance of multifamily construction. Without more new units coming online, rents will return to rising amid a supply pinch in the years to come. You can find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X and Instagram for real-time updates.